In this video, I'm going to cover a simple ICT setup you should know when trading the market, and also I'll be explaining basic concepts you can use to build a strong trading logic and confidence when taking this trade setup. I've been using this particular setup over and over again and it has been amazing. A whole lot of traders in the community has been using this setup to kill prop firm challenges. So stick around, let's uncover this particular setup that will be making wave in the ICS community. Let's roll up the intro, man. Hello traders, what's good? It's Roma out here. Welcome back to my YouTube channel. If you're new to the channel, do well to subscribe, turn on post notification so you get notified anytime I post video content like this, and also smash that like button so that this video can get to other traders as well. Let the algorithm do its shit, you get me? Now, why am I emphasizing that you like this particular video? Now, the last video you got a whole lot of traction in the trading community, and this video got to a whole lot of traders. As you all know, I trade ICS concept. Reason being that ICS concept is the only concept that helps you understand the in-depth reasons why the market moves. Also, ICS concept helps you build up clean charts without having all the lines drawn up on your chart. So if you're a beginner or you're a seasoned trader already, ICS concept is the concept for you. And on this channel, I make sure I simplify ICS concept for you, because already you know for sure that ICS concept is already complicated. So what I do is simplify ICS concept for you. I don't try to change anything. Shout out to Michael Hodderson. All I'm trying to do is simplify ICS concept for a beginner trader who doesn't know shit about the market. So let's head over to the chart. Now, as you can see on the charts, we have two setups here, which is obviously the buy setup and the sell setup. So I'll be explaining in a simplified manner how you can spot out this setup in the market. I even saw this setup in the market today. I took a trade on GBP JPY using this particular thing that I'm going to explain to you right now. Before I explain this setup to you, I want to clarify some things. This is just a chart pattern. Now, looking at this setup, what I love ICT's concept is it's not just built on chart patterns. The chart pattern has reasons why it's forming. The chart pattern has a storyline on the chart before it's printed on the chart. Now, there is a reason behind the chart pattern, not just taking the chart pattern as you see on your screen. You're not just going to look out for this particular chart pattern. You must add up certain things, certain ICT's concept in order to build a good framework before taking your trade. You get me? Also, I want to emphasize on the concept of time. Time is one concept that blew my mind when I got to find out how effective it was in the forex market. As a beginner trader, if you don't understand the concept of time, you will be found blowing your account here and there. Now, the concept of time is pretty much simple. I want to explain one concept to you before jumping over to time and price. Now, for those of you that really don't like school shit, I think this is the part you need to just calm down and understand, because someone that really wants to succeed in the forex market would calm down and want to hear every information in detail. So when we were in school, we were taught about the concepts X and Y, here being Y and here being X, where you get to find, you can plot your graph and stuffs like that using the variables of Y and X. Y could be quantity, and here X could be size. For you to understand this graph, to plot it out, you need to understand the relationship between quantity and size, which is Y and X, right? Without the relationship between Y and X, you won't be able to plot this graph. Now, it's the same thing in the forex market. Forex market was basically built and programmed with the same concepts in mind, which is time and price. Now, if you look at the vertical aspect of your chart, let me get this off. If you look at the vertical aspect of your chart, what is below here? It's time. If you look at the horizontal aspect of your chart, it's what? Price. So basically, you can't understand the movement of candlesticks on your chart without understanding the relationship between time and price. So if you don't understand the relationship between time and price, then you've gotten it all messed up, right? So as a beginner trader, it's obvious that you won't understand this concept and you won't know about this concept as a beginner trader. That is why this channel is here. That is why I came to give you this banger video, you get me? So before you understand this setup, you need to understand the concept of time and price, because without time, you won't know when this setup forms. This setup forms everywhere, but the most effective one is the one that forms according to the stipulated time that it's meant to form. Alright, so the second thing I want to explain to you guys is what we call liquidity. Liquidity in the market is simply your stop order. It could be your buy stop, sell stop, or stop loss. It's your stop order in the market. Now, where there are a whole chunk of stop loss in the market makers is most likely going to hunt that out. As a beginner, you'll be able to notice that the market keeps hitting your stop loss orders before moving in your preferred direction. Yes, that is because your stop loss orders is being hunted by the market makers. Now, if you don't understand this concept, you just keep blowing your account here and there. So you need to understand the concept of liquidity, that without liquidity, the market can't move, literally. You get me? So your liquidity is what fuels the market. So if you can't spot out the liquidity, then there is a 100% chance that you are the liquidity. You get me? So as a smart money trader, you need to know how to spot out liquidity in the market. Now, this is an important concept in liquidity. If you are buying, you want to see sell side liquidity being grabbed. Now, if you are selling, you want to see buy side liquidity being grabbed. Let me just run you a quick one what I mean. If you are buying, you want to see this sell side liquidity being taken out, grabbed, stop loss orders was being placed here, you want to see it being grabbed. And then if you are buying, you want to see buy side liquidity being grabbed. Do you understand me? And also, there are different types of liquidity, but this setup on the chart forms at a particular liquidity area: previous session high, previous day high, and previous week high, or the previous session low, previous day low, and previous week low. Now, this setup forms immediately liquidity has been grabbed, immediately previous session has been grabbed, immediately previous day low has been grabbed. You will always see this setup. You might not see it every day on the same pair, but trust me, this setup forms every day across different pairs. Do you understand me? So once liquidity has been grabbed, expect the market to move in the other direction. Before any significant move in price, you must always see liquidity grab. Now, before you even try to pick out the setup in the market, you must understand the trend. You must know if you are buying or you are selling for the day using your higher time frame. That is not the essence of this video. The essence of this video is to show you the setup. Maybe on subsequent videos, I'll be showing you how you could understand when to be buying and when to be selling. You get me? Now, the next concept here is displacement. Displacement is a simple word for volume. Now, where do you want to see volume kick in the market? You want to see displacements in the market immediately after liquidity has been grabbed. So if liquidity has been grabbed and you don't see displacements in the market with huge candlesticks, then that trade setup is not valid. Immediately after liquidity grab, you must always spot out a displacement, and this displacement takes us to the next one, which is shifting market structure. Shifting market structure. So after displacement, you always want to see a break of market structure, which is also shifting market structure, and it takes us to the other one, and it must always leave behind a fair value gap on that price leg. This is the displacement leg. You must always see that displacement leg break market structure and also drop behind an entry fair value gap where price will come back into for you to take your trade, right? So this is the pattern for a buy setup. And where do you want to be taking your profit on the chart? You want to be taking your profit at previous session high, previous session low, previous day high, previous day low, previous week high, previous week low. That's where you always want to take profit. So if you took a trade setup using previous session low, you always want to take your profit at previous session high. If this setup forms after previous day low has been grabbed, you want to be taking your profit at previous day high, and vice versa. You get me? So this is the buy setup, as you can see here on the chart. Now, it's the same thing with the sell setup. It's just being flipped upside down. Before you sell, you want to see buy side liquidity being grabbed. After buy side liquidity has been grabbed, what next do you want to always see? You always want to see a huge displacement breaking market structure, and then what you want to always see is price coming back to fill a fair value gap that this leg dropped behind, and then your entry, and then always targeting previous session low, previous day low, and previous week low. Right now, I talked about time. The time in which this trade setup plays out is during London session from 2 a.m. New York time to 5 a.m. New York time, and also from 7 a.m. New York time to 11 a.m. New York time. Your chart must always be in New York time when you are using this strategy. You don't want to leave your chart on the default time zone that it came with, right? If I'm to shift this out of the way so I could show you what I mean, right? this is what I mean. Here at the bottom of the chart, you see this time zone bar. Click on that and this is going to pop out. You want your time to always be in UTC -4 New York. This -4 might change, right? It might be -5. It might change according to the season. So right now we are in -4 New York, but the most important thing is you always want your charts to be in New York time, right? Without that, what you'll be doing on the chart remains invalid. You get me? So that being said, let's head over to the chart to see some examples of how this trade setup plays out every time in the market. All right, so we are on GBP JPY. Now this example is obviously the trade setup that I took today. So this is, you can see it here on the screen. It's the trade setup I took on GBP JPY. I didn't just cherry pick it because I wanted to show you how perfect it's working. It's working every day in the market. Now for those of you wondering what this is, right, this is a time zone indicator. Remember I told you that this trade setup forms during London session around 2 a.m. to 5 a.m. New York time and 7 a.m. to 11 a.m. New York time, right? So I have this already marked out on my chart so I don't get distracted, right? To add this on your chart, all you need to do is go to indicators here at the top of your chart, click on it and then search for ICTQ zone. And then once you click on ICTQ zone, a whole lot of ICTQ zone indicators will come out, but the specific one I'm using is this one, ICTQ zone. So when you click on that, it's going to pop out on your chart, and for you to edit it, you click on the body of the indicator and then you click on settings, and then anything you don't want to be showing on the chart, you can just remove it. As you can see, I had removed show daily open, I had removed central bank dealer range, and then I'm just leaving only the New York Q zone, London Q zone, New York open and Asian Q zone on my chart, right? So now over to the example. Now the first thing that I do when I come to the chart is try to mark out time, try to understand time. What do I mean by understanding time? I want to know the highs and lows of the previous day, and I also want to know the previous session high and the previous session low. So marking this out, this is Monday. Remember, our setup normally form after previous session low or high has been grabbed in the marketplace, right? Now what are you seeing here? You're seeing this is still London session. London session is still in play. If I can play this out, London session is still in play. So I don't basically trade London session, I trade New York session. I trade the 7 a.m. to 11 a.m. time window. I'm not saying the trade setup doesn't form them, but my activities already doesn't give me a chance to trade during the mornings, right? So I prefer trading during New York session, right? So with that understanding that I trade New York session, right, the previous session that I am always focused on as liquidity is the London session. I always want to see the London session high being grabbed or the London session low being grabbed exactly during New York session. So already this is the London. I'm just going to play till New York, and here is New York session. And what I did here was mark out the low of London and mark that out, right? Mark the low of London. I already knew that GBP JPY is bullish today. I understood my trend that GBP JPY is bullish today, so I'm looking for sell side liquidity to be grabbed, right? You need to understand this concept first. You don't just jump in and start looking for highs being grabbed or lows being grabbed. You get me? It's not that it's not profitable. You can just trade this strategy without understanding the bias, directional bias, but your win rate only increases once you understand the daily bias for the day, if the day is bullish or bearish. So on this pair, I understood that GBP JPY was going to be bullish for today, and we had news today coming around 3 p.m. Nigerian time, which is 10 a.m. New York time. What I did was mark my previous session low, which is the London session low. Remember, the setup forms after previous session low has been grabbed, right? So I marked that out and I waited for it to be grabbed. So let's play price. And as you can see, the previous session low has been grabbed. But I want to point your focus to something, right? It's very exciting how this setup forms every time on the chart, right? Now, as you can see, this is where London ended, right? And London high was grabbed, and after London high was grabbed, it did what? It gave an impulsive move, displacement. It gave displacement. doing what? Breaking market structure with this displacement candle, and then it did what? It left behind a fair value gap. Always remember that your fair value gap is the space in between this high and this low. The space in between the second candle is the fair value gap. The fair value gap forms with 3 candles, 1, 2, 3. So it left behind an entry fair value gap, and this is a cool trade setup. This is the sell aspect of the trade. Your stop loss will be here. Why didn't I take this particular setup? As you can see, one, I was only looking for buys because it was bullish, the day was bullish and things like that. And also you can see that the range, at the profit range, was not okay for me. My profit target is always a 1:3. If a trade setup doesn't give me 1:3, I'm not taking the trade. Do you understand me? So that is what I did on this trade. I saw the trade play out. It's amazing how you see this setup plays out and you do nothing because you know for sure it's going to play out again. So after seeing this sell side liquidity being grabbed, I anticipated exactly the same thing to happen here, but on the bullish side, right? So if you play this, I'm expecting some displacement. As you can see, there is no displacement on the chart that breaks market structure, right? So you just wait. You are just going to wait for that to happen. And then boom, I had this, right? This is what I saw. Now this is the liquidity grab. Liquidity was grabbed, and then displacement doing what? Breaking market structure. This is the market structure break, right? Breaking market structure. Now after breaking market structure, what do you want to spot out inside of this price lane? You want to spot out a fair value gap, and as you can see from the high here and the low here, this space here is the fair value gap. So you mark that out for your entry, right? I marked that out. After marking that out, what did I do? I placed my sell limit order here. My sell limit order was here, and then my stop loss was below this low here. My stop loss was below the first candle that formed the fair value gap here, right? It was below this low. That's where I kept my stop loss. And then where did I target? I target here, this high. This high really didn't give me 1:3, but it was close by. It's what I call close proximity. That is a clean 1:3. I targeted the previous session high, which was here. I targeted this high also. Remember, this previous session high was grabbed and the new high was formed, so I used that. And as you can see, the 1:3 just slightly, I accepted that. I loved that because the setup was clean, right? So as you can see, this is the trade setup. Market grab liquidity, breaking market structure with huge candlesticks, that's displacement, leaving behind a fair value gap, and then the entry. So this is the trade setup. Now look at this, price came and didn't tap me in. I was like, okay, price is going to use as some sort of inducement, then come back to tap me better into the price. So I never panicked because my trading time was still in play. Remember, I end around 11 a.m. during New York time. This is it, 11 a.m. So throughout this window, let me mark the 7 a.m. Throughout this window, this time window, I was just basically hunting for the trade setup. So price didn't tag me in. I still had a whole lot of time for price to play out, so I was patient enough, and I just set the trade and I left it. I went ahead to engage in other activities, you get me? So let's play it out. Triggered my entry around 9:30, and then the trade was open, right? As you can see, price literally even came down to this other block here, but that's not the reason for this video. So now price came, triggered me, and then what did we have? We saw price move higher to smash take profit, right? So this is a very simple trade setup you can use to take your trades, right? Like, look at that, man. Look how beautiful it is. Look how easy and simple this setup is in the market. Why not learn how to trade like this without having a whole lot of lines on your chart? You can see that this is simple. Even without having all these things on my chart, if I'm to take this off, just understanding two concepts: the liquidity that was grabbed, right? Just having two things on your chart, this line and the box, and that is it. this line and this box. It's not that this box is what is moving price, or it's not that when price comes into this box is going to help push price higher. No, when price, you're only using this box to mark out this level here on the chart so that it can be visible, so that you can see it, right? You see that once you are advanced and you're a pro in this strategy, you won't even need this on your chart. You won't even need this. You just go ahead and place your trade, right? So this was the beautiful trade setup that I took today on GBP JPY. I still have a whole lot of them, but because I don't want this video to go any longer, I would want to end the video here. If you love this content, do well to smash the like button. Let the algorithm take this strategy to other traders, right? Turn on post notifications so that when I drop video content like this, you will be the first to see it, right? Now drop a comment, let me know if you love such videos like this, because I have a whole lot of them and I have a way of simplifying them to you. Let me know if I can be doing more of this for you, right? I wasn't doing all this video like this until the last video where I saw the traction it got on YouTube. So join my Telegram channel for live helping, not yet. Check the description for my Telegram channel link. So until next time, peace out.